Good evening. Welcome to Kenya News Update today. In a stunning market reversal, semiconductor giant Advanced Micro Devices saw its stock price plummet by 17% in a single trading session, marking its worst day since 2017. This dramatic sell-off came despite the company reporting quarterly earnings that beat Wall Street expectations. The culprit? A future revenue forecast that investors and analysts deemed insufficiently ambitious in the white-hot era of artificial intelligence spending. Tonight, we dive deep into the numbers, the narrative, and the high-stakes defense mounted by one of tech's most respected leaders, CEO Dr. Lisa Su. We'll examine whether this is a temporary stumble for a company that has staged one of the greatest corporate comebacks in history, or a sign of deeper challenges in the race to power the AI revolution. I'm your host, and this is our 12-minute deep dive. Let's begin with the raw numbers that sent shockwaves through the tech sector. Advanced Micro Devices, or AMD, reported its fourth quarter financial results. The headline figures were strong. Revenue for the quarter came in at approximately $6.2 billion, surpassing analyst predictions. For the full year 2024, the company generated revenue of about $23 billion. But the market's focus was laser-locked on the future. AMD's guidance for the current quarter projected revenue of around $5.4 billion, plus or minus $300 million. This forecast, while representing growth, was seen as conservative, especially for a segment the company has bet its future on, AI accelerators. The immediate reaction was brutal. The stock fell 17%, erasing tens of billions of dollars in market value in mere hours. To put that drop in perspective, a 17% single-day decline is AMD's most severe since 2017, a period when the company was in a very different, much more precarious financial position. This visual shows the sheer scale of that sell-off compared to recent history. Now, to understand why this guidance caused such panic, we need to rewind and look at AMD's remarkable journey. Founded in 1969, Advanced Micro Devices is an American multinational semiconductor company headquartered in Santa Clara, California. For decades, it played second fiddle to the industry's Goliath, Intel, in the market for central processing units, or CPUs, the brains of personal computers and servers. By the early 2010s, AMD was struggling, plagued by technical missteps and financial woes. Its market share had dwindled, and many had written it off. The turning point came in 2014 with the appointment of Dr. Lisa Su as CEO. An electrical engineer with a PhD from MIT, Su executed a bold strategic pivot. She refocused the company on high-performance computing, betting big on a new chip architecture. The result was the Ryzen and EPYC processor lines, which began to seriously challenge Intel's dominance on both performance and price. Under Su's leadership, AMD staged one of the most spectacular turnarounds in corporate history. Its stock price soared over 3,000% in a decade, transforming it from an industry underdog to a formidable competitor. This timeline charts that incredible resurgence. This context makes today's market reaction so fascinating. AMD is no longer the fragile company of 2017. It's a titan. So, what exactly did CEO Lisa Su say to address the concerns? In her earnings call and subsequent interviews, Su was steadfast. She defended the company's forecast, calling it strong and emphasizing that demand is accelerating. Her key quote, "AI is accelerating at a pace that I would not have imagined." She pointed specifically to a step-up in demand for the company's data center products, including its MI300 series AI accelerators, over the last 2 to 3 months. Su argued that the guidance reflects the company's current visibility and supply chain commitments, not a lack of ambition. She projected that AMD's data center GPU revenue, the heart of its AI business, would exceed $3.5 billion in 2025, a significant jump. But for a market hungry for exponential growth narratives, that wasn't enough. The debate, therefore, centers on whether Su is being prudently conservative or if AMD is genuinely losing ground in the AI arms race. To unpack this, let's bring in multiple perspectives. First, the bullish case for AMD. Proponents argue this is a classic overreaction by a short-term focused market. They point to the company's proven execution under Lisa Su. The guidance, they say, is a floor, not a ceiling. The $3.5 billion data center GPU forecast could be vastly exceeded if demand continues to surge. AMD's chips are gaining traction with major cloud providers like Microsoft Azure and Meta, offering a credible alternative to NVIDIA's dominant position. Furthermore, AMD's business is diversified across PCs, gaming consoles, embedded systems, and traditional servers, providing stability even if AI growth hits a temporary speed bump. The bearish case, however, is compelling. Skeptics argue that in the trillion-dollar AI gold rush, hesitation is fatal. NVIDIA continues to command an estimated 80% or more of the AI accelerator market, with a software ecosystem that is years ahead. Intel is also making aggressive moves with its gaudy accelerators. AMD's guidance, critics say, signals an inability to secure enough advanced packaging capacity from suppliers like TSMC or to convince enough customers to fully commit to its platform. A 17% drop suggests big money investors are voting with their feet, fearing AMD is becoming an also-ran in the sector that matters most. Let's visualize the core of this dispute: the AI revenue expectations. On one side, you have the staggering market opportunity. Analysts project the AI chip market could grow to over $100 billion by the end of the decade. AMD's stated ambition is to capture a meaningful double-digit percentage of that market. Their 2025 data center GPU forecast of $3.5 billion is a key benchmark. On the other side, you have the current reality. NVIDIA's most recent quarterly data center revenue was over $18 billion for a single quarter. The gap is astronomical. This comparison isn't just about numbers, it's about perception. Can AMD execute fast enough to close it? Or will the AI tide lift all boats sufficiently to make AMD's current targets look brilliant in hindsight? This visual starkly contrasts the scale of the ambition versus the current market leader's reality. Digging deeper into the financials reveals more nuance. While the stock took a historic hit, AMD's underlying business remains robust. The company ended 2024 with a strong balance sheet. More importantly, its gross margins have expanded significantly under Lisa Su's tenure, a sign of pricing power and technological leadership. The fourth quarter beat wasn't a fluke. It was driven by growth in both the client PC segment and the embedded business from the Xilinx acquisition. The concern is entirely forward-looking, centered on the data center and AI segment. Some analysts have pointed out that AMD's guidance might reflect a strategic decision to prioritize profitability and sustainable growth over chasing market share at any cost, a lesson learned from the brutal price wars of the past. Others counter that in a land-grab phase like AI, market share is paramount, and profitability can come later. This is the fundamental strategic dilemma facing Su and her team. What does this mean for the broader tech landscape? And, importantly, for Kenya's growing digital economy? The performance of companies like AMD is a bellwether for global technology investment. As Kenya pushes forward with its digital transformation agenda, from Kanza technopolies to increased cloud adoption, the cost and availability of high-performance computing power are critical. A more competitive semiconductor market, with strong players like AMD challenging NVIDIA and Intel, could lead to more innovation and lower costs for the data centers that power Kenyan services. However, if the AI market consolidates around a single vendor, it could limit options and increase expenses. Furthermore, AMD's stumble highlights the extreme volatility and high-stakes nature of the tech sector. For Kenyan investors with exposure to global markets or startups seeking funding, it's a reminder that investor sentiment can shift violently based on future expectations, not just past performance. Returning to the leadership question, Lisa Su's role is paramount. Her credibility is the bedrock of AMD's story. A Taiwanese-American immigrant who earned her engineering stripes at IBM and Freescale Semiconductor before taking AMD's helm, she is widely respected. Her calm, technical demeanor during the earnings call was noted. She didn't offer grandiose promises to placate the market. She presented the company's data and reiterated her confidence in the long-term strategy. This approach has served AMD well during its decade-long comeback. The question now is whether that same disciplined, engineering-focused leadership is the right approach for the hype-driven, capital-flooded AI boom. Some investors clearly wanted a more aggressive, visionary forecast. Su gave them a measured, executable one. The clash between these two philosophies is what triggered the sell-off. So, where does AMD go from here? The next few quarters will be critical. The company must deliver on its MI300 series promises, showing sequential growth in AI revenue that meets, or ideally, exceeds its own guidance. It needs to announce more design wins with large cloud and enterprise customers. Technically, it must continue to innovate at a blistering pace to narrow the software and performance gap with NVIDIA. For investors, the 17% drop may present a buying opportunity if they believe in Su's long-term vision and the inevitability of a multi-vendor AI chip market. For competitors, it's a moment to pounce and question AMD's momentum. For the industry, It's a reality check that even the most successful companies face immense pressure in the AI era. In conclusion, AMD's worst day since 2017 is a complex tale. It's a story about sky-high expectations in the age of AI clashing with corporate caution. It's about the incredible pressure on even the most celebrated turnaround stories to keep delivering miraculous growth. And it's about the leadership of Lisa Su, whose steady hand built modern AMD, now being tested by a market demanding breakneck speed. The numbers, the 17% drop, the $3.5 billion AI forecast, the $23 billion in annual revenue, tell a story of a company at a crossroads. Is this a stumble or a strategic pause? Only time and the relentless pace of AI innovation will tell. For now, the chip wars have just gotten more interesting. For Kenya News Update today, this has been a deep dive into the circuits and strategies shaping our digital world. Subscribe to Kenya News Update today for more incisive analysis of the global events that impact us all.